Welcome to Bunnex Investment Group. In this video, we are going to dive deep on the correct way of trading with the TDI or Traders Dynamic Index. It's basically an indicator that is common in this industry, and will actually use real market examples which you can as well replicate in your trading. But before we go through, make sure you subscribe to this channel and check the notification bell icon so that you won't miss any of our videos as we upload. So in this video, we are going to cover it actually in three parts. The first part being a definition of the Traders Dynamic Index, then the Traders Dynamic Index as a confirmation to, then the last but not least, the Traders Dynamic Index full strategy. So make sure you stick up to the end of this video so that you have to watch this, how to actually apply the TDI in your trading. So firstly, what is the TDI or the Traders Dynamic Index? So the TDI is the only technical indicator that can read the market sentiment, market volatility, and momentum at the same time. So it utilizes Bollinger Bands and moving averages, and in our methodology, the TDI is used as a confirmation too. And I actually give a bound that this is the only correct way of using it. So usually the market makers can manipulate candlestick arrangements, but in doing so, they cannot cheat the market volatility. So this market volatility is actually measured by the TDI in form of the relative strength of a particular currency in their pairing. So this operation, whereby the market makers are actually manipulating the candlestick arrangements, but are not able to manipulate the relative strength of a currency pair in their pairing, will actually affect in what we call divergence within the market. I'm sure this term divergence is actually common among traders, but a few of them can actually apply it in their trading. And the good thing is we are going to review that in this particular video. So basically the TDI is actually found on the bottom part of the chart. If you're on TradingView, you can actually look for this particular indicator. If you are not on TradingView and you want this indicator, please use the link in the description box below to check out our free Telegram channel, where I will drop that indicator for you for MT4, MT5 as well as for mobile. So the TDI basically has the Bollinger Bands, then the moving 50, which is basically a moving average, and the signal line in red, then the most important one, which is the green one, it's the relative strength index line, or the RSI line. It is the one that actually shows us if the relative strength of a particular currency, for instance euro against dollar, if euro is actually rising against dollar, we can see the market going up and the relative strength should also go up. So this was basically an introduction or a definition of the TDI indicator. So the primary use of this particular indicator is to work as a confirmation too. However, this requires us to have a particular setup to stock on the charts. So if you do not have a setup, and if you do not understand how to get these setups, we have an upcoming training that is starting on the 28th of June and ending after 3 days. So in our case, we use the market maker method, which utilizes the manipulated M's and W's, but the use of the TDI is not limited to this, but any setup of your choice, depending on your trading background and what you believe, the smart money concepts, the price action concepts, this TDI can also be applied as well. So by divergence, in our case of the market maker method, where we trade the manipulated M's and W's, we'll be looking for an M pattern or a W pattern. So a W pattern is like this, where we have the first leg and the second leg. What can we see in this particular setup? What we can see is the price is actually showing us as if we are going down. We had a high and a low like that. So in this case, we are actually trying to grab traders so that they'll go low like this. However, the TDI cannot be manipulated as it shows the relative strength index of a currency. In this case, we can see that the first leg on the TDI is actually lower than the second leg. It's actually giving us more information that the market is actually trending up like this, right? And we can see it go up in this way. So basically, that is how we apply divergence on this particular traders dynamic index. Hey, let's have some chart examples where we can apply this TDI. So in this case, we can see that we had analyzed from this part, whereby we determined this as the peak of the cycle. After that peak, we are now looking for up trades. We can see we had first leg, right, lower than the second leg. In this case, this was a valid setup. We can see this as a valid setup, another valid setup like that, right? Let's have another example. A peak. This is a peak formation high, right, from market maker method concepts. Then from there we had this setup confirmed, since the relative strength index is actually showing us a down move and our entry, right? So before we go any further, please check out our free Telegram channel to see other trading services we offer in that particular channel. Let's actually continue with our video. So we are now at the traders dynamic index full strategy. It's actually something that you can apply, something that you can upgrade, tweak a few things, and actually use it to your advantage. So it's basically a very simple strategy whereby you need to first go on the H4 time frame of any particular trading instrument of your choice. Then look for H4 shark fin. By shark fin, we mean, in this case, you can see that when the TDI or the RSI line like this goes out of the band, these blue bands, we call it a shark fin. By shark fin, it means it's just a nickname to actually say a shark has gone out of the ocean and we can now see its fin. So it's basically a shark fin when we see the market, the RSI going out of the bands. So we are just saying look for when the RSI goes out of the bands on H4 time frame. And when you see that, switch to the H1 time frame, right? The next thing after switching to the H1 time frame, look for M and W reversal pattern. We can as well substitute that with any evidence of divergence within that area of interest. Then confirm the TDI pattern with confirm the pattern with the TDI, right? That's now looking for divergence, and then enter. So let's now go over the charts to actually illustrate how this all goes. All right, so I've done some of the work already. The first thing that I've said on the slides is actually to go on the H4 time frame. As you can see, we are on the H4 time frame. Then after going on the H4 time frame, we need to see the shark fin on the H4 time frame. So these lines are actually marking the points where the RSI line went out of the band like that, went out of the band on the H4, went out of the band, went out of the band. So the first thing, whenever you are trading, the market will be actually in current mode. Like at this point, we will be looking to see when the RSI line goes out of the band. Like in this case, we can see that on the TDI, this is what we are seeing. At this point, we saw this RSI line going out of the band and coming back inside the bands. So it's actually a point of interest on the H1 time frame where we now need to look for entry points. So this is the first step to see the RSI line going out of the bands on the H4 time frame. Then next, we now switch to the H1 time frame. We need to go on the H1 time frame, right? Like this. On the H1 time frame, we now need to see proof of divergence, right? Proof of divergence. And by that we mean on the price chart we can see the market actually going up, right? But on the TDI, it's telling us that the relative strength index is actually going down. A candle closure below the 13 is actually our entry point. In this case, a closure happened at this point. That was a valid entry point, right? Going forth, we can start to look again on that our entry parameters on the H4 time frame. In this case, we can see this low and this high. On this particular structure, it's something that is trying to entice traders that we are in an upward trend. But on the TDI, this first leg is actually higher than the second leg. But on this one, we can see that it's inverse, meaning that our entry was going to be below this candlestick closure, right? Going forth, let's look at this point. This is these white lines were derived from the H4. I hope you still all remember. Then in this case, we can see the market was actually going down, but on the traders dynamic index, the market was actually going up. Mind you, this is euro against dollar, trades that could have been taken this year. Then here, what can we see? In this case, it's actually a sloppy rise. We can see the high of that candle up to this point, right? Then we can see that here we had a slope. Candlestick closure below the 13 could actually give us an entry at this point, right? And here we can see that on the price chart we had, right, price actually enticing us to go low, but on the relative strength, price enticing us to price actually going up. So an entry above candlestick closure on the 30 above the 13 EMA, like that, right? Do we still have any point? Right, in this case it was now a very tricky one, because we had price actually going up, and in this case price was also going up. So this kind of pattern or this kind of move is against our rules, because we trade divergence with TDI confirmation. So in this case, although it played out very well, we couldn't take it because it was out of our scope. In this case, we can see the market actually giving us this pattern or this structure, but on the TDI, the market actually sloping candlestick closure below the 13 like that was going to give us an entry. Then we had another example whereby we had this flow, right? But on the TDI, it was opposite, whereby we had this flow. So it was actually a confirmed entry, and any candlestick closure around this point or this point was also valid for our entry. So right now we are now at this zone whereby Euro USD is actually consolidating, and for if we check on the H4 time frame, we can see that we had this shark fin on the H4 time frame, right? It means we are now starting to look for an entry, and from there, if we go back to the H1 time frame, can we see divergence? We can see that we had this structure. At first it was this structure whereby there was still no divergence. So we have this structure, and to actually have a proper point of entry, we need to see proper divergence. So probably we will be anticipating to see the market probably maybe reaching out these points to actually give us a proper divergence on the TDI. But unfortunately, the market has taken so long to actually play out the way we expect it to. So this is also a point of actually in a zone that we may see the market makers trapping traders. So it's actually better to skip that kind of trade. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and check out our free Telegram channel to get this particular indicator. Have a good day.